So now this last year, we've seen these various stimulus packages. We've seen trillions of dollars being put in there, big bailouts for the company, the big, Wall Street and all these giant corporations. We've seen billionaires making record profits during a pandemic while there's like food lines for Americans. Mm-hmm. And when I started really paying attention last summer, so I started going on this platform Rockfin that we're currently simulcasting on YouTube right now, came to me 2 years ago and a couple other people and said, hey, we put your content on here and we'll pay you in our cryptocurrency. And I was like, whatever, man, you got it. Like, sure, you can pay me in your unicorn, whatever. I didn't know what it was. And I was just like, this sounds nuts to me, but sure, I'll take it. Like, I believe you run out every ground ball. Like, if this thing takes off, great. And then last year when the shutdown happened and I lost a lot of road work and I started really paying attention. As I started paying attention, I started to see all this institutional money come in, even from people who maybe, and you guys follow this more than I do. The big banking people, 5 years ago, there's quotes of them going, Bitcoin is a Ponzi scheme or whatever. And now they're putting 5 to 10% of their assets in there for their company or whatever. How are you seeing this difference just this last year from 10 years ago where you had the guy that thought the elites didn't, wanted him to sleep or whatever, to now all of these massive companies coming in?
Right. Well, Bitcoin is, and something I recognized also, because back in, I started my career as a stockbroker and I worked on Wall Street for many years. So that I brought that to Bitcoin as well as the technology background. And so the question from day one has always been, is Bitcoin a new asset class? It's not really a stock. It's not a bond. It's not a traditional currency. It's not fiat money. And so it was a little bit of everything, but also not like anything. And so if it's a new asset class, then that sets up a situation where all institutional money, all money under management, all banks have to own some of it because they are obliged by law to have exposure to various asset classes. And this is an asset class that would be sensitive to inflation and would be a way to create a safe haven against inflation or a store of value in an inflationary environment. So what we've seen in the last couple of years is more and more institutions and more money under management is concerned about inflation. And they're looking for safe havens. They're looking for store of value. As Paul Tudor Jones said, and he was really the first big institutional guy to come out in favor of Bitcoin, he said he thinks inflation's coming really hard and he owns gold, but he owns more Bitcoin because he positions Bitcoin as the fastest horse in the race. So just looking at it in terms of classic portfolio allocation, you have to orient your money based on what your forecast is, what your outlook is for the macro economy, for inflation, et cetera. And you position assets accordingly. And here's this thing called Bitcoin, which is emerging as a competitor to gold. And yet it could potentially rocket a lot higher in an inflationary environment. So then money starts to move into Bitcoin. And then in the institutional market, it's a herd mentality. And it's a competitive mentality. So once one hedge fund starts to buy Bitcoin, then other hedge funds are obligated to take a look at it and start nibbling at it. But Mass Mutual was the first big insurance company to buy into it. We've got a sovereign wealth fund now in Singapore that's buying into it. Corporate treasuries like MicroStrategy and Tesla are putting it on their balance sheet. So all the layers of the financial system, every pool of capital from central bank on down to a mom and pop in their IRA account is now nibbling at Bitcoin. And the amount of investable capital around the world is, if you look at liquid assets, it's about 100 trillion. If you look at the global assets in total, it's about 400 trillion. Bitcoin is still under $1 trillion or about 1 trillion. So if it does compete with gold, then you could see it rise to about 10 to 11 trillion. So that's still 1,000% gain from the current $50,000 per coin. So that's how do you look at it in terms of a money manager, in terms of professional money management, institutional money, We just have now endowments in America are buying it, or putting it on the endowment. And we just had this week a pension fund, a big pension fund in I think it was South Korea. It's just started putting Bitcoin on their balance sheet. So the pension fund industry is worth about 50 trillion or so. It's a huge pool of capital. So, and they need to by law pay out to their beneficiaries. So they have to keep ahead of inflation. And so if Bitcoin's going to allow them to fulfill their mandate as a pension manager, then that potentially is a huge pool of capital. So it's working its way into that huge global capital pool as the apex predator. I like to think of it. It's the apex predator of money, and it's kind of eating its way into that huge pool of, you could call it $400 trillion globally if you add everything up: property, stocks, bonds, jewelry, assets, gold, silver, etc.
I might add that, it was Christine Lagarde at the European Central Bank this past week or two. She gave the best reason to hold Bitcoin, and that is that she said this is a bad thing. She said that Bitcoin is an escape valve from the current financial fiat global system, where Christine Lagarde and Jerome Powell and the Janet Yellens of the world control everything, and they get to allocate capital. As you mentioned, the very wealthy got extremely wealthy in 2020. That's because of the huge money printing, because that's called the Cantillon effect. They get the money first. But it's been an exit valve from day one. The very first Bitcoin ever mined on January 3rd, 2009. In that Genesis block, it was printed the front page of the London Times, which said Chancellor on brink of second bailout from banks. So from the very beginning, it was a political project telling you this is an escape valve from the system of the bailouts. Max and I, this is why we were reporting on gold. We weren't just randomly reporting on gold. What we were reporting on for the previous 4 years, first for Al Jazeera and then BBC World. During the financial crisis, we had a show called The Oracle for BBC World when all the banks were collapsing. And so we were reporting on this already. We were already talking about how the system is so unstable, and the actions of the central banks were further destabilizing the system. So we were reporting on that. We were reporting on the the bail-ins that happened in Cyprus. I think that was 2013, when their banking system collapsed, and they did a bail-in. So they took everybody's money. If you had more than 100,000 euros in the bank, they seized that. And they took that. We reported on Occupy Wall Street. We were reporting on the Arab Spring. These were all reactions to the collapse of the financial system, the banking system, the monetary system, and the interventions in it. So this is just a continuation of that's happened. That it's been an exit valve. It's been an escape hatch for many, many people around the world. We've seen them move into it. We saw Cyprus move into it. We saw Argentina move into it when their country went bankrupt. So all of those people using it as an escape hatch created this asset class. And Fidelity Investment Bank, by the way, which is one of the biggest banks in the world, they have been mining Bitcoin since 2014. So they were one of the very earliest in this. And when they told their clients last year that they should allocate 5% up to 10% of their assets in Bitcoin, that's one of the reasons. What they said primarily is that it's basically is safe from political confiscation and the collapse of the financial system.
Thanks for watching, everybody. Please hit the like button, the subscribe button. Go to patreon.com/Graham Elwood and rockfin.com/Graham Elwood, where you can support the show. Also, I have a Bitcoin wallet, a Bitcoin Cash wallet, and an Ethereum wallet in the show notes. We're taking cryptocurrency. I have a Coinbase affiliation link. We're going to be getting on some other exchanges. So that's how you support the show. Make sure you hit the subscribe button. YouTube is unsubscribing us at an alarming rate. I have a PayPal button at GrahamElwood.com. I even have a Venmo at Graham-Elwood. There's a lot of ways to support our show. We are getting crushed by YouTube. We've dipped under 73,000 subscribers because of YouTube. Thanks for supporting what we do.